Palantir Technologies endured its worst monthly decline since August 2023, with shares plunging 17% in November, as investors grew increasingly wary of elevated valuations across the artificial intelligence sector. The data analytics company's stock fell from a peak above $20.07 in early November to close the month around $16.67, despite posting stellar third-quarter earnings and securing new business deals. The sell-off intensified after prominent investor Michael Burry disclosed bearish put options on Palantir's shares, though the actual investment proved far smaller than initially reported. Burry spent approximately $9.2 million on put options, representing 5 million shares, not the widely reported $912 million figure, which represented notional exposure rather than capital deployed. CEO Alex Karp publicly rebuked Burry's position in a CNBC interview, calling the bet batshit crazy and accusing short sellers of market manipulation. Strong earnings meet valuation concerns. Palantir reported record third-quarter revenue of $1.18 billion, a 63% year-over-year increase that surpassed Wall Street's $1.09 billion estimate. Adjusted earnings per share reached 21 cents, exceeding the 0.17 consensus forecast and more than doubling from the prior year. U.S. commercial revenue jumped 121% to $397 million, while government contracts contributed $586 million, up 52%. Despite the earnings beat, analyst concerns mounted quickly. Jefferies called Palantir's valuation extreme in a November 6 note, suggesting better risk-reward opportunities in Microsoft and Snowflake. RBC Capital Markets followed with warnings about the company's increasingly concentrated growth profile, while Deutsche Bank described the valuation as very difficult to wrap our heads around. The stock trades at approximately 233 times forward earnings, compared to Nvidia's 38 times and Alphabet's 30 times. Broader AI market retreat. Palantir's decline tracked a wider retreat across high-priced technology stocks. Nvidia fell more than 12% in November, while Microsoft and Amazon each dropped about 5%. Among the Magnificent Seven tech stocks, only Apple and Alphabet finished the month with gains. The pullback reflects mounting concerns that AI valuations have outpaced near-term profit potential, with some analysts drawing parallels to the dot-com bubble. Despite the turbulence, Palantir announced a multi-year, multi-million-pound contract with PwC to accelerate AI adoption in the UK, marking one of the company's most significant professional services partnerships. The company raised its full-year revenue guidance to between $4.396 to $4.4 billion, representing approximately 54% growth. Whether these fundamentals can justify the company's valuation in a market increasingly skeptical of AI hype remains